Bitcoin has recently surpassed the $50,000 level, and it seems just a matter of time before we're retesting our current all-time high. But really, the price we're all looking towards is that big 100K level. Today, we're going to be looking at Bitcoin reaching a six-figure valuation, and where better to start than one of the new metrics we have here, which is the long-term holder supply of BTC. And we can see long-term holder is defined as someone that's been holding Bitcoin for 155 days or more, and we can really see the changing market dynamics of Bitcoin throughout its history. We can see only a few years ago, there was only around 14 million BTC being held by these long-term holders, and now throughout the bear cycle and even into the start of this bull cycle, this figure has surpassed 16 million. And considering there's only about 19.6 million BTC that are currently in circulation, there's only around 3 million Bitcoin that's currently being traded, that's available for people to accumulate and scoop up, and this is likely going to continue climbing. Throughout this bull cycle, like we've seen in previous cycles, it's likely going to decrease a little bit as we see some new retail, new institutions potentially coming into the space to scoop up BTC and send prices even higher. But realistically, this long-term trend is probably going to continue to the upside, and it's really going to take into effect basic supply and demand economics. If demand even remains constant, supply is drying up, especially with the halving event coming up. This is almost certainly going to have a very positive impact on price, and especially over the last few days. If you weren't aware, there's been an ETF, a number of ETF approvals for BTC that have had a very positive impact on price as these large institutions, these huge capital inflows have come into the space trying to accumulate BTC. And really, if we go to something like this site here, we can see BTC holdings by these new BTC ETFs have just surpassed 264,000 Bitcoin, about 135% of all circulating BTC. And this has only been live for a few weeks, and they've already accumulated this much BTC, and it's likely going to continue. If we just scroll up here, we can actually see that BlackRock and Fidelity, the two largest holders of these Bitcoin ETFs, are just between them already holding 200,000 BTC, which is an absolutely insane amount of Bitcoin. Like we said, especially considering it's only been a few weeks, really. And again, considering that until only a few weeks ago, this was actually kind of evened out, because if we just look to this article here, we can actually see that Grayscale, GBTC, were actually offloading a huge portion of their Bitcoin holdings as they were converting to an ETF. There was also some drama with the FTX fallout and their forced selling of GBTC. So really, it hasn't been until kind of the 29th of January, about 3 weeks ago, that we really saw the positive net inflows of these ETFs and the impact they had on price. If we just go to the chart here, we can see that since the 29th of January, so if we assume that until the 26th, 25th, when this article was written, the 25th, so we'll assume the 26th of January, that kind of continued. So from Monday, the 29th, was when these Bitcoin ETFs really started having a positive impact on price. And we can see on Monday, the 29th, price opened at $42,000. And as I film this now, prices surpassing $52,000, a $10,000 increase, which is a huge percentage increase too. And at this current rate, if we're to continue increasing about 25% every few weeks, we're actually going to surpass $100,000 before the end of April, which is absolutely crazy to think about. But is this actually a possibility to see percentage increases like this just continue? Well, we need to take into account just the market dynamics. Like we said, the amount of liquid BTC on the network is continuing to decrease. And these ETF providers like BlackRock that have $10 trillion in assets under management, Fidelity, which has nearly $5 trillion in assets under management, if they were to allocate just 1% of their holdings to BTC, this isn't a stretch at all. In fact, 1% of their holdings, being $150 billion, inflowing into the crypto market space, would actually increase the market cap of Bitcoin considerably more than just $150 billion. If we look at the Bitcoin market cap here, we can see that from this date, where the Bitcoin market cap was about $850 billion, it's now surpassed $1 trillion. And since then, we've not seen $150 billion of inflows. We've actually only seen about 13 billion. If we look back to this chart here, we can see that the new BTC ETFs have had inflows of about 264,000 BTC, and depending on their accumulation price, we can assume this is about $13 billion. So the money multiplier effect comes into play here. $13 billion-ish coming into the market, $150 billion increase. We can say this is an over 11 times increase in market cap compared to the inflows we've had of new capital. So if we were to assume, again, that BlackRock, Fidelity, just these two, just the two largest ones, we're excluding any other ETF providers here, just them alone were to put 1% of their assets under management into BTC, about $150 billion, and the money multiplier effect remained constant of about 11 times. This would increase the Bitcoin market cap by about $1.65 trillion, which would far surpass this $100,000 figure. In fact, it'd put us way up here to about $140,000. So is something like this going to happen? Well, obviously it's impossible to predict that, but really the maths behind a move like this are actually in our favor. Of course, it's hard to say that things will remain constant. There's probably going to be some selling as we get to that six-figure level. But overall, the maths do not lie, and things are looking very positive for the future of BTC. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content. And make sure to check out all the resources we've discussed today, as well as these new ones we have here on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, following the BTC ETF approvals, and now that the rampant GPT selling has settled, we can see the true impact of the institutional inflows on the Bitcoin price. And with around 264,000 BTC accumulated by the new ETFs, or about 1.35% of circulating supply, the Bitcoin market cap has increased by around $150 billion, which is around 11 times the amount of capital inflows we've actually seen. And at this current rate, we're going to reach $100,000 in around 2 months' time. Now, I, as I said, wouldn't take this as truth or anything like that. Market conditions change, people start selling, these ETF inflows might not be constant throughout the next few months. But ultimately, the maths are in our favor. And looking at only BlackRock and Fidelity, the two largest ETF providers, if they were to allocate only 1% of their assets under management of their $15 trillion balance sheet to Bitcoin, which would be around $150 billion, it could result in a $1.65 trillion market cap increase for Bitcoin, or around $140,000 Bitcoin price. Like we said, the market dynamics are changing very much in our favor, and it is really simply just supply and demand economics. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin potentially reaching $100,000 level. Do you think we need more capital inflows like this? Do you think the market dynamics are going to change to become a little bit more bearish? Do you think we're already a little bit overbought? Whatever your thoughts are, let me know down in the comments and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.